Hello and welcome to another update video about Ethereum. Ethereum has come very close. It's come very close to the previous swing low that formed here on Monday the 12th, Monday of this week. And it has shown us a bounce from there. Yeah? It has shown us let's say a recovery from there. However, of course, I mean, this was a reasonable point to reverse from there, because this was a previous swing low. However, I have to say that it's obviously not clearly impulsive, the move to the upside. Yeah, we haven't got 5 waves up. As you can see, the reaction is so far only in 3 waves, and the pattern just doesn't show us much strength at the moment. What we can see on this chart is that we're dealing with, in the best case, a set of diagonal patterns to the a set of corrective structures actually, and that we're moving up in a diagonal structure. That's the best case. So I repeated that in the previous videos. The structure hasn't really changed. The micro patterns sometimes do. I think they have changed since yesterday. So, which I update on Discord regularly, also intraday if anything is changing. But really, we are pretty much still in the sideways range that we discussed over the last few days. So for example, we have an initial 3-wave rally in wave 1. We have a 3-wave pullback in wave 2. We had a 3-wave rally in wave 3. We have a 3-wave, sideways correction in wave 3. And now we could get another 5-wave move up in wave 3. And that makes it a larger 3-wave move. So it just shows us that we're just moving in these corrective patterns that we normally call a diagonal structure if it's bullish in this case, but it needs to prove itself. So we are still tracking this pattern as long as the support level is holding, or let's call it the support range. We discussed that support range in the last videos. It's between 2,393 and 2,506. This is the main support region that we see here on the chart for an ABC structure. So this is B wave support. The key level there is 2,393. It is, as I said, the 78.6 retracement. Why is it so important? It is important because normally a B wave shouldn't really break below that level. That is very important. A B wave should normally not break below that level. A B wave can, but then it already shifts probabilities towards further downside. Okay, so this diagonal pattern is already something that is, let's say, we can't really trust it. Okay, so that's important to understand, and therefore we need to be prepared for any wave count changes. It's a very fragile structure. If this was an impulse to the upside, it would look a little bit different. It would look maybe a little bit clearer, but the fact that we're dealing with these corrections, it just means it can change a lot, because there are more than 10 different corrective structures in Elliott wave, and they tend to change shape and structure along the way. Because bear in mind, there is only one impulse in Elliott wave, one impulsive structure, but like more than 10 corrections. So you have to guess which one it is. Typically we start by tracking an ABC structure. This is already morphed into a WXY structure here in wave B, I mean, yeah. So again, the B wave can be everything. It could be a triangle, and that's what it makes so difficult. Someone posted on Instagram, it is so difficult to trade these sideways corrections. And it is, unless you're trading ranges. But then I always say it can be useful to just trade the larger time frame. So the support levels are on the chart, right? So when the price gets close to support, you could buy. And when we get away from support, you could sell. Buy, sell. Where the risk is low is when we are in the support zone or close to it. When the risk is high is when we are far away from the support zone, as we were like here on Wednesday. Okay, so it's all about the question of the risk and then within the range. But how you trade this is essentially up to you. I can't really give you any direct recommendations there. That depends on your risk profile and so on. But overall, the structure hasn't changed. Below 2,393, however, which is that 78.6 fib level, it becomes much more likely that Ethereum's rally is failing. If you actually want to call it a rally, it looks really painful, this move to the upside. And I would not be surprised if it does break down. Yeah, I would absolutely not be surprised if it breaks down. And if it breaks down, it could simply be another extension of this larger fourth wave, and we could test $1,800. So that's the main risk. If we break below 2,393, I would then want it to also break below 2,310 to confirm it further. That's the next swing low there, you know, the red line. But overall, first of all, I think at the moment in the short term, the focus needs to be on whether the bulls can generate a proper reversal after yesterday's sell-off. It's already looking painful. This is only 3 waves up, so can easily fail. And if we can form 5 waves up, yeah, it might, you know, it would be probably wave 1 of C of 3, these 5 waves. There's a little bit more work required to confirm that. Important is the invalidation point locally here is the swing low of wave 2 at 2,554. So any break below that will invalidate the reversal attempt as it is. That's the update about Ethereum. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.